Good morning. It's Saturday morning, the 22nd of January, 2022. This is Ron Brown. I'm going to do a market analysis using my files from the Insider Club and HGSI investment software. Now, I did a video yesterday during market hours that I was going to release, but it was totally outdated by the time the market closed because of the very weak close. So I'm going to do a market analysis video today using end of day data only. And it'll be more current. I'll try to keep this reasonably short. Anyway, where I am, for those of you who want to follow along that have the software and are members of the Insider Club, I have my market analysis user groups. I'm in folder number 1. I'm clicking through. I'm activating the filter. The view that I'm using is under my files. It's the top view. It's top-down analysis major markets, and I have another view down here, number 2, which includes the ETFs, and I'll talk about that briefly, but I want to focus on this right now. Sorting on the raw combo, it sorts on the percentage price change one day, and if you look down this column, you can see the numbers. If you look down at the bottom, I do have one. It's not an ETF. It's a Bitcoin investment trust in here, just so I can keep track of Bitcoin. It's a proxy for Bitcoin, and you can see that it's down 11.8% yesterday. There's a lot of people really getting hurt in the cryptos right now, and that's because they buy on hype. Buy from message boards. They don't know what they're doing about risk control, and it's actually killing them financially. Let's concentrate on the NASDAQ Composite, which I usually do. I put this up. I try to put it up every day on our Facebook group. If you want to join our Facebook group, it's the HGSI and EdgeRater users group. Just search for that, HGSI for the software, and then EdgeRater and other software we use. It's a user group for this, and I post this every day. Paul Reike posts a lot. Dave Steckler posts some. But there's images. This is an image I try to post every day with my commentary on it. So if you want to join the group, just look us up and request membership. Okay, getting back to this. The chart that I'm starting with is my number 1 chart. This is the chart I just showed you that's on the Facebook group, and there's a lot of information here, and I'm going to point this out. First of all, I'm going to open this window, which is an information window. Gives me a support and resistance information. You can see it's blown below all of my support lines on here, which are generated automatically in HGSI. What I'm most interested in here is looking down here at this information about the advancing, declining stocks and volume and so on. And this will correspond with the information over here, so I'll just move it over here. Okay. What I want to do is bring up this tool right here, and it's an arrow, as you can see. So this arrow is about the advancing versus declining, these two right here, and you can see the red line where the advancers are compared, or where the decliners are compared to the advancers. This is advancing volume versus declining volume, and this is new highs versus new lows, and this is the ARMS index, which I find not very useful. Let me put it that way. I won't say worthless, but it really has been lagging. You can see that it was below the 0 line here. Still on a buy signal when the market was tanking, so I don't pay a lot of attention to it, but I've had it in here for years, so I just leave it. The program has evolved so much since I put it in. There are other things to look at, especially VPA support and resistance, chart patterns and so on. Anyway, I'll move on from that. But you can see this market is in serious trouble. It's down 15.1% from the 52-week high. It's in correction territory. And it's up 11% from the 52-week low. So it's really given back a lot. Change since the beginning of the year is 12%. Minus 12%, I should say. All of these are negative. The letter rank on accumulation has gone to red now for E distribution. Just right back here it was still A, and then it dropped to B, and then it dropped to C, and then D. Had to get all the way down here to drop to D, and now it's down at E, which is oversold. If we go back here, you can see there were 3 negative volume pocket pivots in a row, a couple over here also. So there were plenty of warning signs along with these extremely negative candles, but the market was holding within this range here. It was consolidating. It was trying to go up, and it actually broke support here and then had a reversal day. It looked like it was going to hold, and then there was a candle here. It's not a spinning top, but it's a negative candle because it opened here, traded up, and then traded down and closed right here. And then of course the effort to fall, tried to recover the following day. Let me just follow this down here. You know, the volume surprisingly on this day was pretty light, and then we had a test here on light volume also, and then it really started falling at this point as volume increased, as traders started to bail out. Now looking back over here, the bongos are both negative. Those are internal relative strength indicators made by some 5, I believe, HGSI users. I was not in that group, but just people who use the program all the time. The trend is neither up nor down. Volume was up 17.2% over the 90-day moving average. Here's the 90-day moving average here. Volume change from the prior day was 10.9%. So you can see a lot of issues here. And there's a lot of information on this chart, which I try to point out every day. This is an effort to fall candle, which is a bearish sign. You can see the volume above average, the spread is wide, closes down, sentiment bearish. These are the trends I generally look at. These are BPA trends, down, down, down. Okay, now let's take a look at the next chart. I'll just use the quick pick so you can see where I'm going. That's the one I'm using now. I'm clicking down to number 2, new highs, new lows. Look at the number of new lows over here. If I bring up the this information, click on Friday, make sure I'm on Friday, tells me the number of new lows, 528, new highs 9. This is extreme. This is a daily chart. Obviously I don't have VPA signals showing on this chart. If I want them, just edit the current view, VPA, draw VPA flags on the chart, and then they're in here. I just didn't think I needed it because I have the moving averages, and you can see the moving averages here. Here is the 18, the 50, the 100, and the 200. If all of these drop below the 200, then the fan trend is going to be down. Right now, it's still in neutral territory. I'm going to put a crosshair on here, and then I'm going to go to a weekly chart by hitting my alternate W keys. If you look over here to the right where the mouse is, you can see where we are and the number of new lows at the panic selling back in February of 2020, March of 2020. The coronavirus virus scare when everybody thought everything was going to collapse. Same level here. But we are at extreme levels of new lows, and generally when that happens, as you can see back here, the market bounced. We'll see if it bounces this time. Let's go to a monthly chart. Okay, I'm at the same spot. You can see on the monthly charts there's nothing even close to this. And let's zoom out a little bit and see what we have until we get back to, where is this? This is clear back in 2000. This was the internet sell-off. It isn't just internet, it's tech sell-off. And this is clear back in 98 when we had so many new lows. So, you know, we're getting up in a pretty extreme territory, but it can get worse, as you can see. Now let me see if I can zoom out a little bit more here. Okay, this is all the data we have in here. It goes back to 1991, 92. But here we are compared to these two spikes back here. And it's pretty extreme. Let's go back to number 2 here. Okay, now I'm going to go down to my next chart, which is chart number 3. On the quick pick, you can see that I'm in right here. Now this is the advanced decline line for the NASDAQ. If you look over here, it says advanced decline line, and here's my accumulation up here. The advanced decline line is obviously heading down, and I'll give us a little longer look at this. You can see it's really been, you know, pretty flat up in here, and then there's been a long-term downtrend. This is a cumulative line, and it's falling off sharply. So those are the 3 NASDAQ charts I primarily look at, but then I do go down to Ian's multiple indicator chart and look at it. And what do we have here? We have a phoenix. A phoenix can often mean that the market is will reverse because it's so extreme. This gray area here is a bingo, which means the market's totally oversold, and look at all the red up here with these indicators. Everything is extremely oversold. That's all there is to it. The question is, are we going to bounce this time, or will panic set in on Monday when people start looking online and seeing how much money they've lost over the past few weeks? I noticed on investing.com that most people are still fairly bullish. There are more bulls than bears. Maybe those bears or bulls have to be convinced, and maybe it has to get more bearish before this is going to reverse. I don't know. Anyway, I'm not going to spend time on the rest of these. I will, or the broader markets, I am going to go to a regular chart here, just a daily VPA end of day. And I want to take a look at Bitcoin here. You can see what a disaster this has been, or the trust has been, just since alternate C will bring up my crosshair. This is the 10th of November where it's reached its high. I'm going to do an alternate A, bring this up, and I'm going to draw a line from here down to the close yesterday. And if you look down here, over 49 periods, it's down 53.4%. So it's just really taken a beating. Want to get rid of that. Minimize this, and let's move down to the next folder, major markets. Well, actually, I'm going to stay in this folder. I'm going to just go to this view. I'm sorry. That's intraday. I want this one with ETFs. And this is what I use this for. I just like to get a feel for where the strength and weakness was. We use the UVXY for volatility. You can see how much the volatility has shot up. There's an effort to rise yesterday on extreme volume. You can see just not that long ago it was really low, and now this people are buying this expecting more downside. The premiums are really jacked up, of course, on options, and it's probably a little late to be buying this if this market reverses. But I can see where natural gas is. It was number 2 yesterday, up 2.1%. But looking at the chart, it's way off of where it was up here. Winter has been relatively mild. I know in some parts of the country you don't think that's the case, but I'm in Nebraska, and we've had 50 degrees days here, several of them in January, which is highly unusual. I see the TLT rallied a little bit yesterday, well, for the past several days after dropping. Traders must have felt that this was overdone. The dollar bearish fund was up slightly. It really hasn't done much, but I'm not going to go through all these, but you can see why I put them in here, so I can get a feel for both commodities and interest rates and the major markets. Now, if I want to just look at ETFs, I just go down to this folder, and it eliminates the major markets. But what I want to do for the rest of this is I want to go in and show you something that's unique to HGSI, and that's the ability to build indexes and to analyze markets this way. These are what I call my broad market indices. These are generated every day by HGSI. And I'm going to go to what I call 3A just for these are the broad market indices, but these are the major markets only. And I'm going to take a broad look at the market using the S&P 1500 index because it contains the 500, the large caps, the 400 mid caps, and the 600 small caps. So this should give us a feel for the market. I'll just flip through to this. Then I go to another view, and it's folder number 3, percentage price change. This is for HGSI index analysis. I'm going to look at this. Let's go to the 1500, and then I'm going to go to some different charts. These are my regular market charts. These are my HGSI index charts. This index is created automatically each day in HGSI when I do my update, and I can update these intraday too with Thinkorswim running in the background. So where are we here? I'll put that crosshair back up, and this is 2 years worth of data. This is the E distribution compared to the A accumulation. If we look back across here, you can see that we're at extreme levels, except for back here in 2020, it was even higher on the distribution. But we're getting there, but it also tells us we can go further if this market continues to break down. Now this is the A's and the B's in the green, and the C's and the D's, or I'm sorry, the D's and the E's in the red. So it shows those two combined, and there's clearly distribution here. How does it compare to back here? It's not there yet. Okay, the next chart. This just shows the rotation from the accumulation and distribution, how money moves out from one level to another, how money or stocks. Let's go to number 3. This includes the Chaikin indicator, which you can see was going down, and it went negative here. And these are just accumulation distribution bars up here. The first two charts are more useful. This is the advanced decline line, HGSI advanced decline line. You can see for the S&P 1500, it was, a series, pretty flat here. And then series of higher highs, higher lows when compared to this low, higher low when compared to this low. It was moving up, but it's turned sharply down as the market has turned down. Now, this is the information for Friday. 289 advancers at 1166 decliners. Percent advancing about 20%, 80% declining. So the ratio was 0.14. Obviously a lot more decliners than advancers. Okay, go to the next chart. Now this is the percentage of stocks above their 20-day. If you look over here to the right, percent above the 20, percent above the 30, percent above the 50, and percent above the 200 with a 50-day moving average line on all of them. And if you bring up your alternate, use your alternate I key. Anyway, make sure you're on the last day and it gives you the actual numbers. So the percent above the 20 is only 9.71%. What was it back here? It was percent above the 20, 87.35%. The red is the moving average, the blue is the actual number. So you can see how this has dropped off. Let's look down here, percent above the 50. Percent above the 50, 23.51. Back here, it was 57.83%. So you can see what has happened with this market. This is a very insightful chart. Potential buy-sell signals. This is something I put in a long time ago. When you get all red bars, it generates a sell signal. This is a major sell signal here. This is a potential sell signal. When everything is turning red here, including the advanced decline line. This is 5-to-1 down on advancers versus decliners. It's between 3.1 and 5.1 on the volume, decliners over advancers. For both force indexes, the VPOC, and it generated a signal, and that was back. What was that on? That was on Tuesday, but the market was already deteriorating here. You can see there's a negative EPA flag there. So it gives buy and sell signals. They don't always work. Here's a sell signal here, and then it came back up. It never did generate a buy signal again. The indicators turned green, but not all of them were green, so there was no buy signal. This is just a percent above the 50 and an AD line. Move through these quickly. And then there's information about the S&P 1500 yesterday. A lot of information here. You can come in and read this if you do your own analysis. Force indexes. This is the 13-day force. This is the 2-day force. They actually turned negative back here. These are my 3 oscillators, the 3 versus the 6, 6 versus the 18, the 18 versus the 50. The VPOC, negative pocket pivots. So if you analyze these charts on a daily basis, you're going to get a lot of information. And then this is the Mcclellan Oscillator. Take a longer term look at this. Look how oversold this is. If you want to know what the Mcclellan Oscillator is, right mouse click and edit it. It tells you it's an index breadth indicator computed from the difference of the 19-day EMA and the 39-day EMA of the difference of advancing versus declining issues. It's a mouthful, but it gives you a good idea about breadth. I'm going to go clear. I'm going to give us a full 2 years here, and you can see that we're at extreme levels. Nothing else has come close to this. And then this is just another accumulation distribution chart here, and obviously it's negative too. Okay, that's what I do for my daily analysis. I primarily look at the NASDAQ. I'll look at the other major market charts too, but my primary emphasis is on the NASDAQ. I guess that's an old habit from my IBD days. We're high growth stock investors supposedly, but that's really a misnomer for this program because it can do anything. It can analyze any sector, any segment, and not just high growth stocks. Let me do one thing before we go. I'm going to click on this. I'm going to go. I'm in all securities. I hit my alternate spacebar to get there, and I'm just going to go to stocks and groups, moving up and down. Now all of these groups are not moving up, and all of the stocks are not moving up, but this is created daily based upon a combo, and you can see where there was some strength, and this is no surprise. Conservative groups, packaged food, tobacco, Big Five sporting was up slightly. The industries were actually down, but you can see that a lot of the prices were up on this. This does a good job of giving us a quick look at where the strength was. Another conservative group, conservative banks. So you can just come in here and see where there was any strength in a disastrous market. Now these are stocks, whoops, that's intraday. You can follow this intraday. These are stocks $1 to $15. Here's the group, here's the sector. And then, of course, on the other side of this, we can look at stocks and groups moving down. And you can see where there was extreme weakness. The renewables have just been hammered. I'm going to click on a renewable. I'm going to change to the industry group, and if you do that, it isolates these stocks so you can focus upon them. I'm going to go back, and I'll just do a look at this. Application software is the largest, followed by internet-based, then biotech, and so on. Anyway, there's all kinds of ways to analyze what's happening using HGSI software. Well, we'll see what happens next week. I wouldn't be surprised to see more selling on Monday morning from retail traders, and then it may turn around. There may be a whipsaw when the bigger money steps in, and it could drive the market higher. I just am talking about, or actually from showing you what's happened in the past when we get to extreme levels, and that can certainly happen again.